Alrighty guys, welcome back to my channel. My name is Nick. I am a day trader. I trade the 5-minute chart every single day. I'm usually focused on London session and I trade Forex, I trade indices, commodities. Wherever I see my playbook setups on the 5-minute chart, I execute. Now, this is the first video of my day trading tips and tricks series and I want to focus on trend lines for today. Now, why do I want to focus on trend lines? Because I think that trend lines lost a little bit their popularity in the trading community over the past, let's say, months and years, because you can apply them in many different ways. There's different ways to draw it, there's different ways to look at them, and I think it is one of these things which is not so straightforward for a lot of new traders when to actually apply it and when not. However, for me, it is a big part of my playbook, a huge part in fact, and I love the trend line breaks. Now let's just quickly look at the basics, okay? When do you apply a trend line? Usually when you see that the price is either moving to the upside or it is moving to the downside, you can draw a trend line along the price movement, okay? When it's in an uptrend, you can see we have a higher high, we have a higher low, higher high, higher low, higher high, higher low. Okay, and every time a new higher low is formed, it could be in line with that trend line, and you see that the price bounces off that trend line very nicely. So when the price next time comes close to this trend line, you could maybe expect a bounce again to the upside. Same goes for when the price is trending to the downside. Okay, now you can apply this on various time frames, from the biggest ones, the weekly, monthly, yearly, down to the 1-minute time frame. Okay, so it's not something that is just made for one time frame. Also, what's very interesting with these trend lines is that when we look at the break, okay, now sometimes you see that a trend line breaks with a lot of force and the price just keeps on going. Sometimes you see a break, a nice pullback to where the price broke out in the first place, and then a continuation. And sometimes you see a fake, okay? Sometimes you see that the price breaks the trend line, but only to go back up, and all of it was just a fake, and you have to adjust your trend line. Now, when we speak about drawing the trend line, and before we jump into the details of how I use it, I quickly want to showcase this to you. Whenever I draw a trend line, I'm going to the bottom of the move which I'm looking at, and let's say for the sake of this video, we are looking at this small up move over here, okay? At this small up, oops, let me take that tool, at this small up move over here. The way I like to draw it is I like to go to the bottom and I like to take the wicks, okay? Now in this specific case, this candle down here doesn't have a big wick or has a wick at all. So I'm going from the bottom of the candle all the way along the price. Now I like to not take the wick of the consecutive or the next candles. I like to take the body, okay? So as you can see, in this specific case over here, I am aligning my trend line at the body of this candle, okay? And when I started, I always start at the wick. Now here we didn't have a wick, we had only a body, so I started at the body. Let's take another example where we have a wick. Let's focus on this up move over here, okay? Let's focus on this up move over here. Now here we have a very nice wick. So I go to the bottom of the up move to the wick and I draw the trend line. Now you can see the way I draw the trend line, I'm not going from wick to wick, I'm going from wick to body. So after the first candle, I always go to bodies. I align my trend line only along the bodies, okay? And especially on 5-minute charts, which are obviously way more dynamic than the larger charts, larger time frame charts, you have to adjust your trend line from time to time. So here, we could start with a trend line that looks like this, then you have to adjust it, then price moves, and so forth, okay? If you want to use that trend line to simply follow the trend. And that's how it has been, I think, that's how it has been used in the most traditional sense, that you can follow the trend whether it goes up or down. Now, since we know the basics about this trend line and how to draw it, how to look at it, what it does, let's look at how I am using it. And I quickly use the text tool over here. So I am looking at trend line breaks, okay, every single day. That's the first thing which I'm looking at. Now, the trend line breaks, I want them to happen in a specific time window. So I'm not just looking at random trend line breaks, okay? I want to look at a time factor, the time variable. And this is within the first 45 min of a session opening. Okay, that's the time factor. All right, now you see the session opening. Now on the chart in front of you, you see this blue overlay and you see this purple overlay. The blue overlay is Asia session. The purple overlay is London session, and I am trading the London session. So I want this trend line break to happen within the first 45 minutes of the London session opening. If you trade Asia or the New York session, you can do exactly the same thing, okay, within the first 45 minutes. Then where do I want this trend line break to happen? Where? I want this trend line break to happen at a 1 hour key level, so meaning support and resistance, or at a 1 hour demand and supply zone, okay? And sometimes even in combination of both, okay? That's where I want to have this trend line break. So you can see, I'm not just randomly looking at trend lines and in a trend and in a traditional way or just throughout the trading day. I have specific variables where I want this trend line to happen, okay? Within first 45 minutes of a session opening and at the 1 hour key level or at the 1 hour demand and supply zone. Now, let me give you the breakdown why exactly within the first 45 minutes. Because in my opinion, with my experience, what I've seen is that whenever a new session opens, there is a lot of volume that comes into the market. And especially the London session is very interesting because the London session is often the beginning of a reversal, or there is a brief fake in a certain direction and then the price turns around. So the London session brings with a lot of volume into the trading session because the price is coming out of the Asia session. So the Asia sessions are the smaller markets. They don't have that much financial volume, and suddenly you have this spike with the London session and the price moves aggressively in one or the other direction, which causes at times a break of that trend line. So you have the volume, you have the players in the market, and the same thing happens when New York session opens. Often there's even more volume coming into the market, which of course again causes a spike. So the time is very important for me because it gives me that spike. I get that certainty that now the market is open, the new players, fresh players come in and they drive the price. So that's why the time variable. The place, why at the 1 hour key level? Because I love to trade, and my entire playbook is based off that. I love to trade at key levels, at 1 hour key levels. 5 minute time frame is my execution time frame, but the 1 hour time frame is where I draw my horizontal levels, where I draw the support and resistance levels, where I look at important demand and supply zones and so forth. And I'm going to share that over this video series within these next videos, how I draw these things and why they are important, okay? But for now, when we look at this trend line break, keep that in mind. It has to be at an area of value, whatever you want to call it. I call it 1 hour key levels, you can call it area of value, higher time frame structure, whatever you want to call it. It needs to be at the place of importance because you have the price bouncing or rejecting that certain key area, plus you have the volume coming into the market because of the new session, and this can spike and react and cause this trend line break. Now, let's look at some examples on the charts in front of us. And this is very, very, very interesting. Now, over here, when we look at this example, and this was what, Friday the 16th of June. So let me quickly go to the Friday 16th of June on the 1 hour time frame. Okay, you can screenshot this, you can take your notes, whatever you want, whatever is the easiest for you. Now, when we look at this structure, when we look at this 1 hour structure over here. You can see that the price has been moving up aggressively, is in an uptrend, okay? So most likely what we're looking for is for price to come back up into this area over here, where we then see either a break of structure to the upside, where we see a rejection to the downside, whatever it is. At this point in time, when we enter the markets around here, we don't know yet, right? We don't know yet. Now, when I'm looking at this over here, the way I would draw my key level is that I am looking at these 1 hour candles, and I can see that we had here a nice pullback, and then the impulse move starts right over here. And the price is pushing to the upside, and you can see here we have these white candles or green candles on your chart. If you have not changed the color, we have the green candles, and then one red one or blue one as I have it. Okay, and this over here is very important for you to acknowledge, because this is a swing low. This is a swing structure. Price goes up, it goes down, it goes up, it goes down, it goes up. Okay, it's a stair-step pattern. Okay, it's a swing structure. So what I would do is I would draw my horizontal 1 hour key level right here. I take the wick, that's how I do it. I take the wick and I take the body also of this blue candle over here. And the same thing happens over here. You can see this is at 7 o'clock, so this candle finishes at 8 when the market opens. And the same thing, the price comes back and pushes back up. So we have another swing structure right over here, okay? Like that. Body and wick, that's what we take. Now, this is very interesting, and let me go over here again. Now, this is very interesting because we are in an uptrend. Bear in mind, we are in an uptrend. Now, what can we see? We can see that the price opens, okay? This is the London session, and the price shoots aggressively to the downside, right in this key level, which we drew up. Now, what else do we have on that key level? On the 5 minute, we can see it right here. We had some sort of aggressive buying over here. So we also have a demand zone which we can draw up. So what do we have right now? We have the session opening, the price, or the London session opening, the price moves aggressively into that 1 hour key level where we also have a demand. Now what can we see? We can see that the price tries to break it. You see the long wicks, it tries to break once, it tries to break twice, but fails twice to break below this key level. It fails also, and look at this side, it fails also to close below this wick over here. You can see this little wick over here where this demand zone came out of it. It fails to break this little wick as well. And before you know it, the price pushes aggressively to the upside. Comes back, same thing to this key level, it tries to go below but fails and pushes again to the upside. And this is very, very interesting because we are in the direction of the 1 hour trend. We see this aggressive pullback to this key level, it cannot close, it fails to go below, it rejects aggressively twice, and in the process of doing that, it breaks our trend line. It breaks our trend line right here. Now, you can draw that trend line this ways. You could draw it maybe a bit more aggressive or less aggressive. You could draw it like that, however you see fit, but that's how I would draw it. And you can see it breaks this trend line within the first 45 minutes. Now, this is the first 45 minutes right here. Right? This is the first 45 minutes. This is the window right here from 8 to 8:45 London time. This is the window. And we had a clear break. Now, if you don't want to draw it that aggressive, you could also draw it like this. Now, if you draw it like this, you can even see that the price breaks the trend line and it starts to find support on this trend line with these wicks and then pushes to the upside. So where I would have gotten into the market would be probably over here after this second push. That's where I would have gotten into the market, right here. Right here, put my stop loss below, and what would I target for my first profit target? Since we are in an uptrend, I would target this high over here. I would target this high over here. Be the first profit target over here, which is a 2-to-1. And then as the price is moving higher to the upside, we have a big supply zone over here. And that will be my final target over here, 3.4 to 1, something like that. And this is a very easy example of how you can use a trend line when you combine it with multiple factors. When you combine it with a key level, when you combine it with a let's say a time variable, and with a bit of an idea or a bit of a strategy behind it. Okay. Now, as everything in trading, and I keep emphasizing this, whenever you use tools, whenever you use moving averages, when you use supply and demand, when you use trend lines, price action, patterns, double tops, triple tops, whatever it is, head and shoulders, you always need multiple variables to align. You cannot just look out for supply and demand on the 5 minute and whenever price goes into it to trade it. Same with the trend line. Whenever you see a small trend line, you cannot go out there and trade it. Now, to give you an idea, you could have also looked completely differently at this whole situation. Let's say you do not look at the overall structure. Let's say you do not look at the 1 hour key levels, right? Let's say you don't look at this. Let's say you don't look at the sessions. What could have happened is that you could have drawn a trend line right over here, like that, and then you see this aggressive break, you see the pullback to this trend line, you see prices pushing back down, and then that's where you enter for a short. If you would be clueless and if you would have no plan, no strategy, no idea, no other variables to look at, that's what you could have tried to do and you could have been stopped out. That's why it is so important to have an idea, to have a plan behind everything. Now, the way I use trend lines, as mentioned, is I love to use them in the morning, first 30 to 45 minutes for these trend line breaks. Sometimes you have them with the reversal patterns. Sometimes you have a break and a pullback pattern. Sometimes you have a consolidation, then a break and a pullback. Really different variations, and I love them a lot. Now, if you want to learn more about these trendline breaks and if you want to see more about them, I motivate you to subscribe and to follow this channel, because in this tips and tricks series, it's all about day trading, and I will be posting much more information about trendline breaks, price action, and you name it. That being said, have a great day ahead, take care of yourself, and I see you in the next video.